Welcome to another insightful episode of the Dividend Uncle. Today, we're diving into an intriguing debate. We're dissecting Frasers Centrepoint Trust's decision to sell Changi City Point with the objective to reducing gearing, and then announce a significant stake in NEX within just a few months. This move has left many investors wondering if Frasers Centrepoint Trust is clear on its strategic path or if it's making contradictory moves. Join us as we unravel this puzzle, a topic that's vital for investors who value transparency and strategic consistency in their investments. Frasers Centrepoint Trust, in a significant strategic move, divested Changi City Point for 338 million Singapore dollars, a transaction that enabled a notable reshaping of their portfolio. This divestment was not just about reducing the asset base, it aimed to strengthen Frasers Centrepoint Trust's financial standing. The deal decreased Frasers Centrepoint Trust's aggregate leverage from 40.2% to 37.1%, indicating a more robust and stable financial structure. Furthermore, the divestment improved Frasers Centrepoint Trust's hedge ratio of fixed interest rate loans from 63% to 73%, enhancing the trust's ability to manage interest rate fluctuations effectively. The divestment also resulted in an estimated net gain of approximately 10.9 million Singapore dollars for Frasers Centrepoint Trust. The Dividend Uncle was impressed by the move, as it showcased the management's skills and proactiveness in making the financially savvy move. Watch my previous video highlighting the divestment. Just 6 months after this divestment, Frasers Centrepoint Trust made a bold investment decision by acquiring an additional 24.5% effective interest in NEX from Frasers Property Limited, its sponsor. This acquisition increased Frasers Centrepoint Trust's effective interest in NEX to 50.0%, at a cost of approximately 523.1 million Singapore dollars. Notably, the property value of NEX was assessed at 2,127.0 million Singapore dollars. The acquisition was financed through a combination of net proceeds from a proposed private placement and debt financing. This strategic acquisition was aimed at bolstering Frasers Centrepoint Trust's presence in the Singapore suburban retail sector, reinforcing its position as the largest prime suburban retail space owner in Singapore and the largest pure-play retail REIT. Addressing the big question, Frasers Centrepoint Trust's strategy under the microscope. A burning question has been on everyone's lips, and it's the same one my friends were eager to discuss after hearing Frasers Centrepoint Trust's latest announcement. Is Frasers Centrepoint Trust really focusing on what's best for all its investors, or is there a conflict of interest in their recent business decisions? The sale of Changi City Point, followed swiftly by the purchase of a stake in NEX from Frasers Centrepoint Trust sponsor, Frasers Property Limited, has certainly turned heads and sparked debate. Particularly, this sequence of events seems to challenge the initial rationale behind the divestment, which was to reduce FCT's leverage. So, what's at the heart of this issue? We need to untangle whether Frasers Centrepoint Trust's actions were genuinely aimed at benefiting all its investors, including you and me, or what if, horrors of horrors, the primary goal was to support their sponsor. Imagine a situation where a familiar neighborhood shop might be giving special treatment to certain customers. Is something similar happening here with Frasers Centrepoint Trust? The Dividend Uncle's take. Now, let's delve deeper into Frasers Centrepoint Trust's strategic moves by breaking it down. 1. Comparative strength of NEX. NEX stands out as a stronger property compared to Changi City Point. It boasts a much larger and more diversified catchment area. It is the largest shopping mall in the Northeast, and counts on residents in Serangoon, Toa Payoh, and Ho Kang as its customers. Additionally, NEX's tenant mix is more varied, catering to a broader range of consumer needs. This diversity in tenants is crucial for stability and growth, especially in varying economic conditions. As for the lease terms of the properties, NEX has a lease title period 40 years longer than Changi City Point. 2. Higher yield and DPU accretion. The acquisition yield from NEX is notably higher than the yield at sale of Changi City Point, standing at 4.8% compared to Changi City Point's 4.3%. This higher yield translates into distribution per unit, or DPU, accretion, which is beneficial for us as unit holders. A higher DPU means more income from our investment in Frasers Centrepoint Trust, which is always a welcome prospect. 3. Gearing post-investment. Post-acquisition, Frasers Centrepoint Trust's overall gearing will be lower prior to the divestment of Changi City Point, thanks mainly to the private placement. Before the divestment, the gearing ratio was at 40.2%. After the acquisition, the gearing ratio will be at 37.8%. The Dividend Uncle would prefer lower gearing for added financial safety, but a sticking point for me is that retail unitholders like you and I will be unable to participate in the fundraising. Disregarding this minor pain point, I find the lower gearing comforting. Balancing the views. While weighing these considerations, it's crucial to recognize the risks involved. The increased exposure to a single asset, NEX, does raise concerns, especially in uncertain economic times. Nevertheless, when these risks are balanced against the strategic advantages and the promise of sustained growth, Frasers Centrepoint Trust choices seem to tilt towards benefiting the trust. By focusing on NEX, a property that aligns more closely with its strategic objectives and offers potential for increased DPU, Frasers Centrepoint Trust has positioned itself as the largest pure-play retail REIT in Singapore. These decisions are poised to bolster Frasers Centrepoint Trust's standing in the market and bring favorable returns to its unit holders. Therefore, I believe that these transactions were carried out with the best intentions for the Trust's future. Frasers Centrepoint Trust appears to have acted with a clear vision for long-term growth and stability, keeping the interests of all its stakeholders at the forefront. In conclusion, it's clear that Frasers Centrepoint Trust's latest maneuvers, the sale of Changi City Point and the purchase of an additional stake in NEX, even though they involve dealings with its own sponsor, seems to be a strategic move that aligns with its long-term goals. These moves seem to be deeply rooted in a strategic vision that aims for long-term prosperity. Focusing on bolstering its suburban retail portfolio, coupled with the anticipated financial gains, points to a well-thought-out plan by Frasers Centrepoint Trust. These decisions, taken together, indicate an effort to solidify Frasers Centrepoint Trust's standing in the market, with the ultimate goal of delivering benefits to all its investors, big and small. That's all for today's episode on the Dividend Uncle. We hope this analysis has shed light on Frasers Centrepoint Trust's strategic moves and their implications for investors. Don't forget to like, share, and subscribe for more investment insights. Stay informed, stay smart, and keep investing wisely.